people sitting in your audience?
Not in a public.
That's funny.
And I did not receive anything via email in either our district's general account or in my email account.
Okay, so let me go ahead and start the report, and then we're going to talk a little bit about the auditors. For the balance sheet, December versus November, we had an overall decrease in liabilities and ownership equity of $118,232. This was due primarily to a smaller than expected apportionment for the month of December. Susan and I were just talking a little earlier that they've confirmed that that's the revenue that we got.
Well, and keep in mind that November was larger than anticipated, so I'm just wondering if that has some bearing on why December is reported so low.
That could be. On the other hand, if you look at what we had budgeted for the year, through December, we are only 48% overall of what the annual amount would be, where theoretically I would expect us to be at 50%. Maybe we'll make that up in March and April when we do have a larger apportionment still coming to us, but it's just something to take note of, in my opinion. It's only 2%, right?
2% of something.
Exactly. Profit and loss statement based upon the approved budget, the district is under budget. And net income by $139,000, 144. And that, and again, is due to a smaller than expected revenue apportionment and a little bit more expense than what we had budgeted. There's been no change in the approved budget.
Go, Raquel, can you go to the first section? Of course. The bottom line, it's the 117.8 there, right there. Okay, so I didn't notice anything that we don't already know why it's over. I'm just checking with my buddy over here. So it looks to me like we're 117% of our planned budget. So we're a little bit over, right, Rachel?
Correct.
About 17% over what we had anticipated at this time. But there are reasons for that we've talked about, things being done in 1 month and booked in another month.
Right. The maintenance on the parking lot, obviously we had some change in staffing expenses when we had Linda and Raquel start at the same time. The expense of sending Raquel and Judith both to the board clerk training, just some of those expenses that were not anticipated when I was budgeting last spring.
So in summary, then the expenses that we had, let's say, for example, repairs and maintenance, those were prior fiscal year expenses that fell into this fiscal year.
And,
yeah, there was one. Yeah.
Yeah, one. So administrative expenses were about 70%, 17% over budget, but we know the dynamics. Could we go down to Community Health and Wellness Center for my benefit? You couldn't get my computer hooked up, so I need. Okay.
You want to scroll back up, Raquel? It's on the previous page.
Okay.
A little bit more, right there.
Yeah. So what I'm noticing there is we're about 10% under budget for the Community Health and Wellness Center expected expenditures.
Correct.
Okay. All right.
And again, there's been no change in our fiscal budget halfway through the year. So our late account, we posted $0 in quarterly interest earnings for December. As Susan reminded me, we'll post that when we get the cash on our hands, and that would be in January, I presume. So, the cost value for the account is $1,707,707 with a fair market value of $1,667,000. The rate of return is 2.17%.
Okay.
Nothing to get excited about there, right?
Trend line up. We were used to 0.003 for so many months.
That
Oh,
Our Cal Trust account statement, cost basis, average cost amount for this account is $5,759,054. And the district earned $11,142 in dividend income this month, with an unrealized gain of $5,730. Bringing the portfolio's total to a value of $5,575,758. As of December, the one-year yield on this medium-term fund was 1.34%.
right direction. right
More than
direction.
1%.
Yes.
And again, on our property tax revenue, we had an accrued apportionment of $8,806, and we're feeling that we'll be picking up some more as we get into the next half of the year.
I got my email today
Okay,
saying it's due February 1 to April 15th, so.
fair
Yeah.
enough.
Okay.
Check detail report. I didn't have anything outstanding from my perspective. Do you want to go and pull that? You got that up already,
Mhm.
right? Okay. Did you have any questions?
I didn't see anything odd. I already got questions answered on the $25,000 check for, can you go back up? No, up. Up, thank you. For the, stop right there, for the property tax disbursement. Payroll tax. I mean payroll tax, my eyes, payroll tax disbursement, that had a logic to it, and it happens a couple of times a year, so I'm all clear on that.
Yeah, I would expect that there would be a payroll tax variance due, because our payroll was a little higher than budgeted, so. They might know what we pay on workers' comp as far as a percentage of payroll.
It's very low, but I'll, I was trying to think off the top of my head, I don't remember.
And who does our
So-
workers?
We did just get notice from SDRMA where we have our workman's comp that because we've had no claims. We just got that one today, Judith, if you didn't get it in your email yet.
But Beta does our workman's comp.
I'm sorry. I
Yeah,
meant
okay.
Beta, I didn't mean SDRMA, I'm sorry, yeah.
It's workers' comp. Yeah,
Not workman's.
oh, okay.
Workers, I didn't say workers' comp, did I? Not?
Yes, you did.
Thank you. I've been
There's
chastised.
confusion here.
I got my fair come up with some years back. So
Oh dear.
I got it. So, the name of the company is what?
Beta Alliance or Beta Healthcare. They were transitioning, so I don't remember which name they go by.
Okay. And Rachel, is that a company that we have used for the years for workers' comp?
Yes, we've been with them for a long time. It's part of the circle or umbrella of, if you will, of the Special District Risk Management Authority. There are many agencies related to that, so they can bring together some of the best rates for small employee districts.
Okay, and let me ask,
Actually, small correction on that, Rachel. Remember, this is the year we finally found out they're not under the SDRMA umbrella, and we're looking to see if we can get under the SDRMA umbrella.
Yes, you're
Sorry.
right. No, I'm glad you corrected me. I keep confusing them with our other folks.
We inherited some information that was incorrect about Beta and SDRMA, so we've been trying to untangle that. So they're not under the same umbrella, but we're looking to see if we can get under that umbrella. So we're trying to turn something in the next couple of months for an estimate from them, but we're not sure where that may end up. But Beta's been, well, for the district, I think over 10 years is what we found so far. They'd probably go back even further.
and our premium that we pay, and this is just for my own edification. And companies that I've worked for, you could pay it in several different methods. You can do an estimated amount for the year, what your payroll is, times whatever the calculation is. And you can pay it monthly, you can pay it quarterly, however, or you can actually pay it whatever your actual payroll is, and we'll do an accounting every quarter. So my question is, when we pay our workers' comp, how do we come up with that amount? Is that an amount that we've already agreed to pay for the year? Then at the end of the year, we do an audit, what the payroll dollars true payroll dollars are, then they do a recalculation and they whack us with an adjustment, or do they give us a refund check? I've had both of those.
So they give us a refund check. I don't remember, but they do the annual recalculation based on the classification of the employees that we have. So ours is being done annually as we've inherited. We've not changed anything to quarterly. And then they did just send us what she's referencing, where they want us to reclassify our employees because they may have something unclassified. We turn in the total number of productive hours for the year, but we do turn in quarterly reports about productive hours for them.
Okay, so let me ask this question. I'm very familiar with how workers' comp likes to reclassify people out of the admin and put them into something else at a higher rate. So do we know what amount of dollars we have with being charged at the admin rate versus the worker rate?
I don't remember this exact dollars amount, but it was actually when I called them, because I called them less than 30 days ago, we were reclassifying in the other direction back into admin.
Okay,
It had been classified incorrectly before, so I was making the correction into admin for a majority of our employees.
so that would, to me, that would mean that we would have an overall lesser rate.
Yes, that's what I talked to him about.
Okay. And let me ask you, someone like Teresa, for example, is she classified as an admin for workers' comp, or is she considered like a,
Outside sales.
She's the only one classified as outside sales according to the classifications that they provided, but we're still looking into that.
Considering she's the one who, on a majority of her time, if you took an overall proportion, she's gonna spend more time out in the community than anyone else. So she's really the best classification. For everybody else, we're essentially admin. Outside sales obviously seems like a weird title, but as you know, Terry, they don't give you very good titles to match job descriptions.
I got you.
Yeah, because we did discuss like what her role is, and the guy said that's the closest one, because we were looking for a different classification.
Otherwise, you have the workers' compensation rating board come in and they'll reclassify if they think that you're messing around.
We're
Right.
here to help you.
We were not
No.
going.
No.
Don't come help us.
That's the only reason I'm asking the question.
Yeah, no, you're
I
right.
know where we are. But sometimes you get adjustments on their bill at the end of the fiscal year, and everyone's going, well, what the heck happened to us, right? When they give you an extra.
But don't you get a credit for submitting the reports timely or something? Wendy was always.
There is a 3 to 5% credit that you do receive if you submit it before their specified timeline. So I always try to submit it at least 3 weeks before their timelines.
Does that mean we get 9%?
That would be nice, but no, they don't give me that.
Thank you for doing that.
Okay. Excellent. So I'll do report. Is there any other questions on CalTrust?
No,
And I'll read
the
this.
check detail, oh, yeah.
The community investment funds report. I'll read this whole thing. The report shows utilized funds invested in community health and wellness, specifically for the development of the property, including maintenance, repairs, permits, and consultants for the first quarter of this fiscal year. $89,597.13 of community funds were used. For the second quarter, to date, there was an additional $30,000, $436.72 spent. The total amount recommended to reimburse the health district is $120,033.85. That makes sense?
Yes.
Yeah, okay. Under
Peter's paying Paul.
Okay. Under disclosures, the investments of the district are in compliance with the district's 23 investment policy. The balances in the district's investment accounts give the district the ability to meet its expenditure requirements for the next 18 months. I certainly agree with that. Any other questions that you had at this point?
Nope, I think our December financials help us know halfway through our fiscal year how we're doing. And feels even Steven, even keeled little bit high on the one category, but
Do you think then, since we are halfway through the year, looking at the plan, the budget that we did for this fiscal year, that we did a pretty good job of budgeting, that Rachel did a good job last year? I used to hate doing budgets. I used to hate it, but you know, our company before had a, you got a bonus. If you ran your community, because it was assisted living, skilled nursing, all that kind of stuff. And if you could be within 2.5% of your budget, then you got a bonus.
yeah, land the plane in this circle.
Mhm,
Yeah,
mhm,
gotcha.
That's it, that's it.
Nice.
Out of a $12 million budget, if you got
Yeah.
within 2.5%. So
Mhm.
anyway, so that was always a fun experiment.
Yeah, yeah, how close can we get?
Mhm.
Well, I feel confident that we're hovering in the right zones. And we'll know more each month as we get towards the end of the fiscal year.
Mhm. Okay. Yes, ma'am.
Okay,
Don't forget to recommend the transfer
yes,
sum. To,
so we'll be recommending to the board that
The
that transfer
The
be made.
120,000 thing?
Right,
Okay.
I agree with you.
$120,033.85.
it has to be even thousands. And
Yeah.
so if you've ever wondered what the number 110 reimbursement receivable PIF is on the balance sheet, that's a little plus or minus between 120,033.85 and 120,000. So
So if we were just having a discussion, I would ask you what your recommendation was. What would be your
which
recommendation?
one?
Okay,
120.
fair enough.
Right, rounding down.
Works for me.
Because we have that money in that account.
Yeah. Gotcha.
I don't know that I had anything more with regard to the financials.
Mhm.
I did want to talk about the CPA audit.
I'd love to hear.
Okay, so Rachel, can you give us an update, or are we gonna let Susan jump on the knife and?
I think both Susan and I will probably have comments, but I will let you know, I finished up with David Foreman, our principal through CLA. Our financial transaction report has been filed with the state. I've submitted the final census piece that is new to that. That was submitted today, but the rest has all been submitted and we have our copies in our server file. So at least that part is done. I have an outstanding email to him asking, could he give us an ETA? Could he give us any other status? Was there anything else outlined? I haven't heard back from him. So Susan, I don't know if you have any additional info on that.
She's over here shaking her head.
I'm sorry.
No.
No, sorry. You can't see me.
Yeah. So I know that we still need to finish the management part of the report, but I haven't heard anything else from David and we're kind of a little bit in limbo until I hear from that. I did get the final notice that all the financial transaction report to the state was filed yesterday. So it hit the deadline,
Yeah,
but
Okay, that's good news.
That is good news.
That's very good.
because the one radar thing we don't want is the state finding a reason to make us special,
Exactly.
more special than we are.
And that's really all I was
Yes, me too.
really
Because
concerned.
every board meeting I'm going to, and I've gone to a lot in the last 3 weeks, everyone has that on their agenda and everyone says it's filed, it's filed. So I'm glad to hear we're filed.
yeah, we're filed.
Mhm.
May I ask, oh,
Go ahead.
a question of protocol, probably for Susan and Rachel. You will be interviewing for new auditors.
Correct.
Is there a option where in our contract with them, there can be a penalty clause if they do not provide the required documents by deadlines?
I'm sure we can build it in. I actually just got an RFP template from Jeff specifically for audit services. So I'm going through it right now and setting it up for us to make sure it includes our requirements, including this financial transaction report. I was going to bring that forward and before we submitted it to make sure that we have dates or deadlines that are approved by both of you on when we expect to have that audit done. So I can follow up with Jeff to see if there's some sort of caveat we can build into that.
I don't want to anticipate this type of problem, and I understand it's because they've had their issues, but their issues became our issues.
And they should not.
And I don't want their issues to be my tissues,
You're right.
right? So,
Every year there's been issues.
yeah, it's been a rough ride with them. So I'm hoping the new folk will be much more integrated in their own life, so we're not suffering through it. But if you could ask Jeff.
Yeah, and I did, I put out through CSDA has a community thread, so to speak.
Yes.
And asked a number of different districts who they loved for working with their auditors. And so I have a pretty good list of 6 or 8 potential candidates that once we finalize our RFP, we can shoot it out and specifically invite those folks, since that we know that they have special district relationships and history.
Fantastic, very good.
I know when and I say we, in my prior life, when we had done agreements with CPA firms to do our annual audit, the penalty for them was that they would be liable for any penalties that we would have to pay filing our returns, both state and federal. I don't know if that would enter in for us, but if there's any taxes that we owed, there were penalties on them,
Yes.
they would own those.
Unfortunately, there's no way to repair reputational capital with the state if we're late.
Yeah, absolutely.
But at least we could hold something over their head. But for all that I'm sure you all did, urging them on, thank you for doing that.
Fair enough.
Yeah. Glad we made the deadline.
Okay, I don't know that I have anything else that was on my issue list.
Do we have a chart of accounts draft? Are we looking at
Yes.
something? Okay.
We do.
Written in another language.
Oh, I know.
Yeah. That one's really tiny. If you can make it a little bigger, yeah, maybe a little more. That'll work.
Good.
Yeah. So we've referenced this in the past. Our chart of accounts really were something that we all inherited from back in the day when previous CEO, CPA, and bookkeepers. So what we've done here is we asked Marnie to put together pretty much a more current standard looking chart of accounts with the various expense lines that we also have that are more unique to us. Then Judith and I went through them and really tried to make sure we would understand where would we put all the various expenses so that we had much more consistency on the go forward. Knowing how the district will be doing business going forward, it makes sense for us to start changing this in a little bit better way. You'll see if as you have it, scroll through it, you're not going to see the administration broken up separately from wellness center. That would be fine. We would still be able to produce a report for you so that you could see those. And we would do that by class instead of having complete separate line items. And that will make the reporting much easier to do and much more consistency in how the expenses are logged across these accounts on the go forward, so that we're not doing something different this year and then, God forbid I get hit by a bus or win Mega Millions and live in Tahiti for the next 10 years. The next CEO would follow the same sort of expense categories, and that we would have less variability and subjectivity to some of these expenses that I think you're going to see from historicals. So that's why that was the rationale behind why we redid this, mostly to keep it current. since, as you'll recall, we'll have to be moving to QuickBooks Online for the upcoming fiscal year, it made sense to rebuild this at that time for that as well.
Okay, I'm good.
I want to make sure I understood the nature of this instrument. This is an internal to finance team members to track expenses, right?
So what it would mean is that these would be the expense and line items you would see in the 23-24 budget. And all of our financials going forward in next year would follow the same line. So for example, when you look at our regular report number 3, you would see these line items and you would still see those other categories, but now you'd see these line items across there.
So with the report number 3, thank you for being specific. The way we have it arranged now is administration, health and wellness center, and grants.
Right.
Is that going to remain the same?
It would actually look a little different. Go ahead and hit that, Raquel, that report number 3. So instead of having administrative expenses broken out this way, you would have all of those expense line items and you'd be able to have this across budget. Then we could have this exact same one and just look at the wellness center.
Okay, I want to make sure that we retain the ability to break out chunks.
We
for-
would.
For transparency and also understandability.
Absolutely. We'd be able to break that out. And it would actually be a lot cleaner because you'd have the same consistent expenses and you wouldn't be seeing quite as much duplicative kind of line listing. You'll also see, if you want to go ahead and jump back to that chart of accounts, Raquel, sorry. Can you jump all over the place?
Jumping, there you go.
There you go. If you scroll up to the top, perfect. You'll see that we also have in there a couple of things renamed. For example, for our income coming in for the wellness center, we have it broken out a little bit different between rental income, program fees, and wellness center income for event space. Scroll down just a shade there, Raquel. Right about there. Perfect. That's with the expectation that we may have, let's say, a long-term tenant who pays a monthly rent versus someone who is renting a part of the facility for a community outreach event versus potential program fees. So we wanted to build in those potential income line items now, knowing that that wellness center opportunity may come up in the next year or 2 years. So that's one change that you would see a little bit of. And then probably one of the ones that has sparked the most conversation is you'll see that community development disbursements as an equity line item. Everybody see that off to the left there? Nope, right there in the middle of the screen. Under, yeah. And the point behind that is that we keep calling it the Community Investment Fund. And I know that that confuses everybody when it shows up because we keep looking for some sort of investment vehicle somewhere that's called that. And the naming of that fund has always been challenging. So we are hoping to rename it the Community Development Disbursements. This way we know that those were funds that were dispersed. Right. Back to development, yeah.
The term equity refers to it being from investments. What does equity mean?
Susan, do you want to explain that since it's specifically to an accounting process?
Assets minus liabilities equals equity. So,
Okay.
so if you've taken and invested in the wellness center, it increases the assets, it increases the equity. Okay, it's the dual set of books.
And those are the only 3 names on the chart of accounts that are equity identified, correct? I'm checking my own understanding.
Yes.
So really, in a for-profit entity, you have common stock and retained earnings. And so this is the equivalent of what's left.
Retained earnings.
Right. It's
All right. Well, I know what I came in on some of these meetings, so I know what brain power you all put into this, so, I'm all for refreshing and clarity, so I'm good with this.
Okay,
And then just the only thing that we told Marnie, we promised we'd bring this up. You'll notice that the expenses are also now in alphabetical order.
Yes,
So instead of the more traditional, old-fashioned, old school style of listing it by number, we would now just be able to go directly alphabetical, and it should be much easier to track that way as well.
or some.
and then just reiterating that we'll be able to break out those
Absolutely.
elements for, okay, that's very important in my view.
Absolutely. Yeah, and by using classes, which are better ways to tag some of these expenses, we can run a report by any kind of class and have a complete set of financials just for wellness center operations versus regular administration or whatever classes we need to finalize on. It will make reporting much easier.
Very good. I'm all for easier.
Yeah. Well, in this case, easier means clear.
Yeah,
so I assume at some point you're gonna be able to print out a chart of accounts. Alphabetically, as I just heard, which is good for those who need to have that. But I presume you can also do it by account number.
If you need,
Numbers, are we?
go ahead.
I mean, I think we're doing away with account numbers.
Right, we wouldn't have the separate little line item account numbers with it. They would no longer exist.
Okay. So what's that gonna do to our CPAs? Are they gonna go nuts on that? I mean,
Yeah, well, they went nuts 2 years ago.
no, I'm not trying to be,
To change their entire,
I'm not trying to take us
Yeah.
off track of whatever we're trying to do, but having worked in business for too dang many years, I understand, when you're looking at your chart of accounts, 1,000 is where your cash starts and 2,000 is where your receivables start. And I get all of that. 0.01 and 0.02 and 0.1005 means a lot of different things. But it means the same thing to everybody if you're an accountant. So I'm just wanting to make sure that what we're doing here is something that's not gonna have to be reinterpreted.
I don't believe so. I haven't been in, that hasn't been indicated to me. That wouldn't be any kind of challenge. So, Susan, unless there's something you're aware of that we hadn't considered, I didn't see where that was going to be a challenge in any way.
back in my auditing days, which was many moons ago, you took the prior year work papers and did the current year audit based on the prior year work papers. So if you had the chart of accounts this way, you're not gonna have it this way. So that, I think that's what you're saying, is that there's going to be a, well, we're switching firms, but we're not switching the chart of accounts when we're switching firms, is another problem. So our new firm is gonna get this old, and then they're gonna have to switch. That's my concern.
well, perhaps. Rachel, if this needs one more rinse, because I hear Susan indicating there could be a industry standard problem here. Could they have another powwow on that and let
Oh,
us know?
absolutely. I mean, we're not,
I use it, I use a chart of accounts for my operations, as simple as they are. With the same numbers I always assign to clients. The hundreds, the 200s, the 300s, I mean,
well, I can tell you, I apprenticed with Pete Fallbrook and Mitchell, and I get it. And that was embedded in my brain back when I
Right.
was just a beginner, so I
we
understand.
didn't have computers back then.
But we still had a chart of accounts.
Yeah, oh, definitely. With the little tabs on the general. ledger.
And even with our computers, we still have chart of accounts.
Oh, that's very true.
And it's easy enough for us to align these with the numbers. And just know that on the reporting, we can report primarily via the expense name. That would maybe solve a little bit of that transition in that first year. We also know that the first year that we go with a new auditor, there's always that learning curve. So in some respect, having this switch over start after the first year might not be as difficult a learning curve for the auditors, but it's easy enough for us to review this, and Susan and Marnie and I can have a more in-depth conversation on how to make some of those solutions happen.
I guess the only thing that I would like to make sure of is, it is unfortunate that we're not using the same CPA firm. Either it is or it isn't, but the point being is, you could call somebody on the phone and go, this is what we're gonna do with our chart of accounts. Are you okay with this kind of a thing? If they said, yeah, I'm good.
We could
But you
probably
don't,
talk to David about that.
you know,
We
and if they say it's
Okay,
okay. And then number two, what about other health districts? Are we in new territory? I mean, are we doing something that?
We're not really doing anything too unusual as far as, if you look at Grossmont's financials, which is the last that I've looked at, you would find that theirs is considerably more complex than ours. But the overall format is not that different from what you're looking at here.
Do they use account numbers?
I would have to go back and look because they report their information so different from ours
Okay,
because of the library and different revenues, and they had the bond that they just finished up, so it's a little different process. But I can talk to Tom, who is their CFO, and he's been around a great many years with the finance on special districts, so we can also use that as inside district information.
Okay. I don't have a problem with us going down that road. I
Right.
mean, as far as the change. I just want to make sure that if I say it's okay, it's because you guys have done your homework.
Yeah.
And it is okay, because I won't know the difference otherwise until we get into trouble.
right. If this is gonna be a unicorn in the area of health districts, we at least need to know that.
Yeah.
So, that would be good for a second round of rinse so that we can know. How's that?
Yeah, because someone's gonna say, Brown, you're the treasurer, so tell us all about this. I won't have a clue, so I don't want to go there.
Yeah.
Don't worry, Terry, it's our job to make sure that you never have to answer a question in that way.
Perfect. Thank you. That's all I'm looking for.
We got you.
All right. I don't have anything else on my agenda. You ladies have anything for us?
I'm good.
You okay up there, Miss Executive Director?
Yeah, I might actually want to keep my meetings here because I've got the fireplace behind me and the cat is here, and I'm technically wearing my jammies right now, so.
Sounds good.
We're happy, you're happy.
All right.
No,
Anything else?
I'll be back in the meetings tomorrow.
Okay.
We're adjourned.
Bye. Thank you.
All right. Good night, everybody. Thank you.
Bye.
5:17. Thank you.
Thank you, sir.
Absolutely. Absolutely. Thank you very much, ladies. I appreciate all your